Hey everyone, these are today's top crypto headlines. Elon Musk acquired Twitter. Too many speculations as to what he will do with it. Investors are bullish on crypto adoption. A new poll reveals that the majority of institutional and retail investors think crypto will overtake traditional investment vehicles. Meanwhile, the stock market is still in turmoil. Robinhood apparently reduced its staff as their stock price dropped to a new low. And the story that I want to discuss in more detail in this episode is this one. World Economic Forum pushes Change the Code Bitcoin campaign. This is a dangerous campaign, so I will elaborate on this one. Let's get started. Welcome to Crypto Corner, everyone. This is the news edition episode 467 of your favorite video podcast, where we talk about everything crypto related so that you can navigate safely in the cryptoverse. First, let's begin with the obvious headline. This is from the last day. Elon Musk's Twitter acquisition brings a ton of speculation as to what changes he will bring to it. From Dogecoin tipping jar to bringing Trump back to the platform, everyone has ideas as to what should be done. Is he going to end the NFT profile pictures? Quite frankly, I don't care. I'm sure he will do what the market wants. After all, this is a public company and decision making is not down to just one guy. I do believe that he will make it better though. Dogecoin was pumping yesterday on the back of this story. However, today it is down. It is down to almost 12%, wiping out all of these gains. A more important headline though is this one. Both institutional and retail investors believe that crypto will see universal mainstream adoption. Bitstamp's latest CryptoPulse survey showed that the overwhelming majority of cryptocurrency investors believe that crypto will see mainstream adoption within the next decade. The data comes from a survey of 28,000 respondents from 23 different countries, including over 5,000 senior institutional investment strategy decision makers and more than 23,000 retail investors. 88% of institutional investors and 75% of retail investors believe that cryptocurrencies will see mainstream adoption within a decade. A further 80% of institutional investors said that cryptocurrencies are set to overtake traditional investment vehicles such as stocks and bonds. Having such a large number of institutional investors realize the potential of cryptocurrencies paints a very bullish picture for the future of the crypto industry. But at the same time, the stock market continued to plunge, and the latest victim seems to be the popular online trading platform Robinhood. Robinhood experienced a rise in popularity during the pandemic, ushering new investors into meme stocks and meme coins and cryptocurrencies with its zero-fee trading. It catered to a market largely ignored by traditional brokerages, those with just a few $100s to invest and not wanting or not being able to pay a $5 fee for each trade. However, as markets began losing steam in recent months, and especially now, Robinhood stock is down 75% on the annual time frame, with an additional drop of 5% following the announcements regarding staff cutbacks. This news doesn't surprise me at all actually. Netflix, Tesla, Facebook, major tech stocks are all down, and with that crypto too. The crypto markets are very correlated with the tech stocks right now, so this is a squeeze that torments many right now. I don't see much of a bull sentiment going on, and no reason for it. While interest rates continue to go up, riskier assets are bound to lose steam. But interest rates will not go up forever. I expect this trend to continue for another few months though, so in my next episode I will do market analysis again. In the meantime, let me direct your attention to this headline from Fully Crypto. The World Economic Forum has jumped on board with the Change the Code, Not the Climate campaign. The campaign is calling for Bitcoin to change to a proof-of-stake consensus mechanism. The World Economic Forum also stated in 2017 that Bitcoin would consume more power than the world does today by 2020. So, a statement that didn't really age very well. The World Economic Forum posted a video on Twitter that pushes the narrative that Bitcoin should shift to a proof-of-stake consensus mechanism rather than the current proof-of-work one, claiming that a basic change in coding could virtually eliminate Bitcoin's energy use. The campaign is called Change the Code, Not the Climate, and as it was launched a month ago, I reported about this at the time. It is backed by a co-founder of Ripple with representatives of Greenpeace and the Environmental Working Group and several smaller groups battling Bitcoin mining facilities in their communities. The campaign uses data from the Cambridge University, which admits that it uses approximations based on theoretical models that rely on specific assumptions to come up with the figures, and argues that a basic software code change could see Bitcoin's energy consumption drastically reduced. However, as Fully Crypto points out here in this article, while the end result of this assumption is true, the process is far from simple, as we know from Ethereum's lengthy and complex process. For those who are not aware, Ethereum, the second largest cryptocurrency, is in fact trying to make this change in their mining protocol, and it's taking them about 4 years already, if we count from the time of conception to execution. The developers just pushed this event further back, and it's now unclear if it will even be done this year or early next year perhaps. This is how not simple such a change is in the code. And the video claims that it was experts who uncovered the basic software code change, but if this is the case, then those experts would have known that it was far from basic, and it would result in Bitcoin's security resting with a few validators rather than a global network of miners, something that flies in the face of the fundamentals. I've talked about the complexities in terms of security vulnerability and even miner centralization. We already have Bitcoin whales that move the markets with very large trades. Do we really want these guys to have the dominance in the network as well and in the governance too? I mean, I won't really go into further details as I don't really want to repeat myself. I'd say this every time. I mean, my position on Bitcoin change to proof of stake from proof of work is unchanged. I don't want this to happen. I don't think it is safer for Bitcoin. My solution, of course, is to use greener sources of energy, which many miners already do. This could be encouraged, and it can expand drastically if governments actually encourage it and help it, aid it, rather than making changes which are precarious in the least. And another thing is that metrics and statistics could actually be used in various ways to prove a point that serves your narrative. Now, let's take this example, for instance, gold versus Bitcoin energy consumption. If we look at this chart here, an ounce of gold compared to 1 Bitcoin, it's obvious that 1 Bitcoin is more energy wasteful than an ounce of gold, right? But how about annual consumption? How much is Bitcoin using versus gold? Right, a very different picture. What if we replaced gold as a store of value with Bitcoin? How much energy we could save if we were to do that? I'm not propagating against gold, but you see my point. If we justify gold mining, then the same arguments can be used to justify Bitcoin mining, and it's only a matter of point of view. Some people don't believe that Bitcoin is needed, others find a huge necessity for censorship-resistant form of money, something that we have never had before in human history. It's a question of priorities and, of course, a question of integrity. Those who say that Bitcoin should be switched to proof of stake are clearly not having its best interest in mind, but in fact, they are trying to destroy it. Ripple co-founder and executive chairman Chris Larsen, who is sponsoring this campaign, would love nothing more but to see Bitcoin fail so that his centralized coin can have a chance of surviving. I reported about this when the story first broke. He is spending $5 million in support of this campaign. I wouldn't be surprised if he doubles this amount, but I do hope that nobody will take this seriously enough. On top of this, Bitcoin changes are issued as a proposal that has to be voted for and accepted by the network participants, miners and not operators, so I doubt that many will be keen on this. We'll see. I will keep you updated on this topic. This episode of Crypto Corner is sponsored by DYOR, an exchange that I have been using for well over a year already. They operate in 150 countries with licenses in USA, Estonia and Singapore, and provide spot and leveraged trading on numerous assets. Not only they have loads of cryptocurrencies, including some of the newest coins to hit the market, but also derivatives such as crude oil, precious metals, gold, silver and more, stocks such as Nasdaq and MiniDAO, and they offer up to 100x leverage on many of these markets. What I find very useful is that on spot trading they separate cryptocurrencies in groups like DeFi tokens or proof of stake tokens or tokens from the Grayscale Trust portfolio or Binance Smart Chain tokens and so on. This makes it easier when I want to focus only on a specific category of tokens, and they keep adding more and more assets. They have tripled the list of supported coins since I started using this exchange, so there's a much better choice already. In terms of security, they keep the majority of their funds in cold storage with only a smaller portion in hot wallets that are used to pay withdrawals, and all withdrawals are manually approved during working hours only, so there's less risk of violations or exploits. They offer a copy trading service, so users that aren't very experienced can take advantage of those who are more skilled and make profits by copying their trades in an automated and uncomplicated way. You can go through the stats for each trader and choose what amount to allocate to them, and you can choose multiple traders to copy at the same time. You can use it on a desktop or mobile. Their app is on both Android and iOS, so it's easy to use it on the go as well. As I said, I've been using this exchange a lot throughout the past year, and the customer service team is very responsive, unlike many other exchanges where I've had to wait for days and weeks sometimes to get any response. BTR has a live chat service, so you can find assistance pretty fast. They also offer up to $258 in various bonuses for new users, so grab the invite link from the description below to register and find out more. Alright, well, this wraps up today's episode of Crypto Corner. You are now up to date, and I hope this brought value to you. If it did, please show your support by leaving a like and a comment below. Or if you're new to my channel, hit the subscribe button and enable notifications so you never miss an episode. Also, make sure that you check out the links in the description below, where you will find links to all of the crypto services that I'm personally using and that I recommend to you, including exchanges, hardware wallets, charting tools, and other services that I use to earn interest on my long-term crypto holdings. My ebooks as well. These will help you get a better understanding of crypto and to navigate safely in this industry. If you want more valuable crypto content, follow my blog crypto-corner.com or scan the QR code here and sign up for my bi-weekly crypto newsletter. It's free and it's packed with market analysis, news and other insights to keep you well informed. Thanks for staying until the end, and I'll see you in the next episode.